You say, Bob, that we're 70% odds, Cold War II, continued sanctions, and crude marching higher, ending somewhere between here and 150. Here in 150 is a pretty wide thing, and it gives me very little comfort.
Well, it's an uncomfortable situation. Since the weekend, Tyler, we're really into cascading surprise escalations. And the biggest oil supply interruption since at least the Iranian attack on Abqaiq in 2019, and probably going back to the first Gulf War in 1990, 1991. So this is an authentic Class A oil emergency. And look, when we're in this kind of situation, there's only two things that can stop oil prices from rising at this point. First, the market has to become convinced there's no real threat to the almost 5 million barrels a day of Russian crude exports, and then the 2.5 million barrels a day of product exports. That's why we're up so high, is because the self-sanctioning by traders and shippers are just not touching the crude. And until they get certainty that those exports won't be sanctioned in some way, they're not touching it. And so the other way, unfortunately, is the way all oil booms end, with recessions and sort of savage demand destruction. It's not pleasant, but that's just the mathematical reality. So, Rapidan, we model in a normal economy, we think around $150 WTI. You're at a level where consumers are going to start to give up. That's where you're causing a macroeconomic burden. But that's normality. This is not normal. We have war, we have inflation, and so somewhere between here and there, one of those two things is going to happen. I wish we had a crystal ball on that one. I'll call you as soon as I get it, but we don't know at this point.
So let me follow up with two questions. You say that traders, importers of Russian product do not want to touch the stuff until they know what's going to happen. So, and I understand that. What then happens to that product? Does it just stay on the Russian side of the border? Does it not come out of the ground? What happens?
Well, it backs up if prolonged, because the oil is flowing out of the fields through pipelines to ports and storage, and then loading on boats or going through pipelines. And it's really the seaborne oil, about half Russia's oil, that's now blocked. And if it doesn't get unblocked, it will back up. Inventories will fill up, pipelines will fill up. And if that continues, they'll have to shut in oil at the wellhead. Mm-hmm. And it's that risk of a severe supply interruption is probably what motivated the IEA to announce a release yesterday of 60 million barrels. So
Russian seaborne oil is being blocked by whom and how? Where?
So it's being blocked in the Baltic Sea and the Black Sea, and to some degree in Asia, because boat owners simply don't want to take the risk of loading a Russian cargo for fear they could be sanctioned by that. Or even Chinese banks are starting to deny letters of credit to importers. So folks are saying, look, until I'm sure I don't face risk, I'm either going to charge a lot of money to take this. That's what they were doing last week. Mm-hmm. But now you're getting reports where they don't even want to touch it at any price. So a good amount, well over 50% of Russia's oil is sort of blocked for the time being until we get more certainty on the sanctions.
Shepard Smith here. Thanks for watching CNBC on YouTube.